High unemployment rate, super low oil prices, really bad economic. Why is the stock market still rising? Will there actually be a crash? Well, let's find this out together, will we? Hi guys, welcome. In this video we're going to talk about the upcoming stock market crash, what you should do if this actually happens. We're also going to talk about different types of investors and the three main mistakes you should absolutely avoid doing. So, in these harsh times with a high unemployment rate, with super low oil prices and an overall really bad economic, why is the stock market still rising? Will there actually be a crash? Well, let's find this out together, will we? If you like this video, it would be super awesome if you could give this a thumbs up or a like. This really helps the YouTube algorithm and my channel. Really appreciate it. So, there are basically two types of investors out there. The first one is the one that holds the cash, waits for the perfect opportunity till the market goes down or even crashes, and when everything is at the bottom, they think now's the perfect time to get right in and put all their money on it. The other person thinks that the market right now is on a discount, so they see a lot of valuable options for themselves to put their money in, but then the next day the market rises another 3% and they are thinking, oh my god, no, I need to get in it now or I'm gonna miss it out. Well, there's one huge problem with both of these approaches, and the problem is the market is not logical. You cannot predict the stock market. Nobody can actually. So it's very dangerous to try to predict it. Either way, if you try to say when it's at its lowest, or even when you say when it's at its peak, you cannot predict that. There's some experts thinking we're on the edge of a new crash, like 2008 or 2009, and there are other experts that are basically saying, well, we are on a new bull run, or we will get into a new bull run. So basically you get both sides in this picture. So in this video, let's talk about the biggest mistakes you could make in this situation, listen to either way, and address what you should really do to get the most profit out of it. So investing has become a very popular topic lately because many people are sitting at home. Maybe they lost their job, maybe they cannot go to work. So it's only natural that they're looking for ways to get that money back. And investing, of course, is a very fast and very good opportunity to do that. But of course, this holds the potential to many unforeseen problems and risks, of course. Mainly when the things don't turn out as expected, like all the time. So let's take a deeper look on that first investor, the one sitting on the sideline, having all his cash and basically waiting for the stock market to come down, crumbling down, to finally reflect the economy. On the surface, this totally makes sense. Many famous investors are actually predicting the market to go down even lower, and many think that it will take the economy way longer than predicted to actually get back up again or to heal itself, if to say so. But there's one major flaw we really should address here. The stock market does not reflect the economy. Of course, we all know that the stock market price can be influenced by unemployment rates and the actual strength of the business. But that does not mean that they have to match each other. Basically, the main reason for the stock market to rise in these times is that many people think, well, maybe it will not get that bad as expected. Maybe it will be even better, who knows? And basically the Fed printing money. Yeah, the Fed is printing a lot of money, basically. The best tip for the first investor would be to decouple himself from this kind of belief. To decouple himself from the belief that the stock market is a reflection of the economy and also is rational. But what it isn't, of course. Stock market, in fact, is completely irrational. The stock market reflects actually what the investors are thinking, what the economy will look like in the future. So basically what they expect the market to look like in the future and not the actual current economy. So to get serious here, if you get anything out of this video, then just remember this. Invest consistent, buy long term and hold. This is the best tip I can give you if you're that kind of investor. So funny side note, if you would consider it funny, a new study came out that if you want to invest in winning stocks, you just need to find one with a cool ticker symbol. Yeah, I know it doesn't make any sense, right? At first. So what actually are ticker symbols? If you take stocks like Apple or Tesla or Microsoft, you have the full name Microsoft Corporation, and then you have the ticker symbol. For Microsoft it is MSFT, for Apple it's AAPL, for Tesla it is TSLA. So this is basically the ticker symbol for the stocks. Ticker symbols like pizza, Wi-Fi or pets did actually much better than most of the other companies. Of course, I will not engage you to actually invest in those companies like pizza, Wi-Fi or pets. I just wanted to show you how actually crazy and irrational the stock market can be, because we buy stocks that sound nice and that get some emotion out of us, like pizza, pets, and just shows you how irrational the stock market can be. So I'm really curious about this. Would you actually buy stocks like pizza, pets, Wi-Fi or money? Please let me know down in the comments. I'm excited to know your answer. If this actually lets you feel good or not, please let me know down in the comments. Another way to feel good is to subscribe to my channel. No, really, try it out. It helps a lot. So now let's address the top 3 mistakes you could make. Mistake number 1, you cannot time the market. I think I got over this a couple of times now, but honestly, you can't. Even if you're right 1 out of 10 times, most of the times you cannot predict the market, because the stock market right now is no reflection of our economy. So timing the market makes no sense at all. So we have a very good example for this on Reddit post from a user named Schneid. He analyzed the last 40 years for the S&P 500 and used 3 investing styles. First we have Tiffany's terrible timing. She saved $200 per month in a savings account, earning her 3% interest, waiting for the perfect time to invest. She always invested right before the 4 biggest market crashes. When else? After 40 years, her 96k savings turned into 663k savings. Next we have Brittany Buys at bottom. I love these names. Honestly, best names ever. She saves the same amount, waiting for the perfect times to buy. She had the world's best market timing, like nobody else. She always bought the day the market was the lowest after each of the 4 crashes. This earned her 956k. That's a lot, right? And last but definitely not least, we have Slow and Steady Sarah. You get where we're going with this, right, from the names? Okay. She did not watch the market at all. She was not very interested in investing at all. And the day she opened her account in 1979, she just set up a $200 per month auto investment in an index fund and never looked at her account again. Her account now is at 1.3 million. I repeat, 1.3 million. This really much shows you that timing the market does not work. So mistake number 2 is don't buy impulsive. Don't just jump into it expecting a short-term profit, because like I said, I think 100 times before, you cannot predict the market. You can't. Just slowly buy in and hold it long term. That is all that matters. Number 3 of the mistakes would be don't wait to invest. Don't just sit in the sidelines and wait for a crash to happen so you can put all your money you saved over the last 30 years, 20, 30 years, whatever, and put it into one stock. No, don't wait to invest. I know, we get these news articles for years now. The market will crash. Biggest crash ever. Tomorrow it will crash for sure. And you think to yourself, oh my god, oh yeah, I will invest tomorrow. 2 years later, I was still not invested at the time, but tomorrow it will crash. This news headline said it will crash, so I'm gonna put all my money in it. Won't happen. Don't wait for the bottom of the market. You can wait for it till you're old and gray. So lastly, I think this is the answer you've all been coming to. Will the market crash or not? Well, the answer is nobody can tell. Nobody really knows if the market will crash or not. If you ask one person, he will say to you, yeah, tomorrow definitely the market will crash. Another person says, nah, no, we're hitting another bull market. Trust me, I know it. In my opinion, you should not change your investment strategy. If you have a stable job, if you have an emergency fund, very important, you should just stick with your investment choices. This should be continue investing and hold. Constantly invest and hold long term. In my honest opinion, I think this will take some time. I don't think that we will hit new highs soon, or that the market will recover super fast, or especially the economy. I think this will take some time, maybe 1 or 2 years, but I don't think that it will go really quick. It will take time before everybody's back on track, before the majority of people will go out there and start spending again. This will take time, because most of the people after this crisis will be very cautious. So it's just normal that it will take time, maybe 6 to 12 months, that the people will be cautious about it. So it's only normal for things to slow down. So last of all, the most important tip, I think you already got it, is to buy the good ticker symbols like pizza, Wi-Fi and pets. Just kidding, no. The main point out of this video is invest consistently and hold long term. Thank you for watching. I really appreciate it. If you haven't done so, please give this a thumbs up or a like, whatever you like to call it. And this really helps the YouTube algorithm and helps my channel. I really appreciate it. Let me know what you think about this video down in the comments. I'm really trying to improve my stuff. So just be honest, I can take it. I see you all in the next video. Take care. Bye.